Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Ethereum and its ticker ETH. None of the content is financial advice. Let's get started. ETH has rallied a lot over the last 90 days. You can see it's the second most rallying crypto after XLM. We covered XLM at a great length on the channel. You can check out the video on the channel's homepage over here. You can see this is ETH. We have covered a lot of ETH over the course of the 2023 and 2024 as well as 2025 market cycle. XLM, you can check it out over here over the last 5 days. Made a last video on it. Going back to ETH, it's up by about 89 to 90% over the last 90 days. Over the last 30 days, up by about 18%. Over the last 7 days, up by about 18%. Again, about the same. And over the last 24 hours, up by about 2%. Where is the current price for ETH looking at? Currently, it's slightly under 3K, market cap at around 360 billion. In terms of the volume, it's at around 16 billion, circulating supply at around 120 million. Overall, the rank has been constantly at second spot for Ether for the longest time. If you look at the technicals for ETH, again the fully diluted market cap and the current market cap is one and the same. Again, if there are any there aren't any unlocked, and if there is any new ingestion into the supply, that is due to the inflationary and the deflationary nature of the token releases with respect to the burn in each supply. In terms of the current price action, it's coming back to a critical juncture. You can see if you would have this green ascending line that ETH held as a support throughout the after the first initial drop in the bear market of 2022. This ascending green line held support for the most of the time till about late February 2025, when the price action took a downturn, and since about end of March of 2025, the price action has tried to test this green line, come up to it. Now in late June, early July of 2025, it's the first iteration where the price action has met this ascending line. So it's a key area to watch. If ETH were to break out of this range and go beyond this green line and try to flip it into support than in the resistance, then the next target is from the Fibonacci levels perspective, it's a 0.618, that is at around $3,400 for ETH. And beyond that, ETH has successfully managed throughout the course of 2024 at least 3 times come close to that $4,080, which is the 0.786 in terms of fib levels. So those are the two key levels to watch to the upside, the $3,400 and the $4,080 per the fib levels. To the downside, again, first, if this area acts as a resistance, the ascending green line that is, then the 0.5 fib level at around 2900, the low 2900s is per the Fibonacci levels a good area to look for. In terms of the machine learning based price forecast for ETH, the model says that now that we are in this post halving year, if there is a bullish run in the market in the next 6 months without a euphoria, that is a 1 standard deviation bull case for ETH at 68 percentile confidence level, saying that price action likely stays between the $3,200 range, that is for this week, and as we move towards the end of the year or middle of December of 2025, the ceiling is at around $4,900. So ETH gets somewhere between 3,200 and 5K, roughly speaking, without a euphoria in the market. If there is a euphoria in the market, that is the 2 standard deviation rallies like ETH enjoyed in later half of 2021 as well, and 4 years later potentially could enjoy in the later half of 2025. The ceiling is between $3,473 and about roughly speaking 7K. So 7K is the 2 standard deviation ceiling for ETH per the machine learning based model trend on weekly price action since 2017 and seasonal RMI and LSTM based technique. 3 standard deviation or the 99.70% or almost closer to the 100% confidence says that with 3 standard deviation confidence, the ceiling for ETH is between $3,700 and about $9,500. That is the blow off top scenario. If that blow off top were to occur in the next 6 months, the likely ceiling per the machine learning based models, again thousands of hours of effort behind these models, these are not some AI prompted models, these are in-house developed machine learning models, not just for ETH, for top 100 cryptos by market cap. On the website cryptoweeklies.com, the link is on the bottom of your screen, available for free. You don't have to pay or sign up for anything. The models get updated every day to accommodate recent price action. Again, they are not retroactively fitted models. They take into the consideration the live data as well as the historical data for making these forecasts. Again, $9,500 is the highest that ETH could go in 2025 per this blow off top scenario. Again, there is always a 0.3% chance that the price action goes higher than this, but again, realistically speaking, a 10k ETH it is close to as close to the blow off top scenario as it gets. Again, there is always, if you were to look at the number of calendar days, there is almost one day out of the 365 days where the price action could go higher than this red line. Again, that's the kind of probability that we're looking at. With respect to the regression based estimation of what is the fair value for ETH, it's coming in at around $3,800. So per the polynomial regression based model, again this pink line is the fair value for ETH accumulating below one standard deviation residual applied to the fair value. This green line, again historically speaking, that's where the bear market accumulation as well as the dip buying in middle of a bull run makes the most amount of sense. We made a lot of videos related to ETH on the channel when the prices were lower than the green line. Again, you can check it out over here to just verify what I'm trying to say over here in terms of the timestamps of when we made these videos. Somewhere between late March and early to mid April of 2025, that is about 4 months ago. You can see 3 to 4 months ago we made a lot of videos on this channel related to ETH. You can check out the entire series and let me know if you find this kind of content helpful in the comments. Right now we are slightly the price action is slightly above the green line. Again, that comes at around $2,400 roughly speaking. Price action is about $500 to $600 higher than that at the least. The fair value, again, is by no means a stopping point for any rally in the bull run. You can see in 2024 alone there were 3 separate instances where again the fair value was much lower back then at around 2100, between 2100 and 2500 back then in 2024, and there were 3 instances where the price action went above the fair value and also slightly above the one standard deviation residual applied to the fair value. And if you look at this yellow line, historically speaking, that has been a good indication of what is a non-euphoria target for ETH that it consistently achieved in a bull run of at least in 2021 as well as in 2024, at least 3 times in 2024. If that kind of a scenario is ahead of us, the one standard deviation ceiling or residual applied to the fair value takes the price action to $6,300. So that $6,300 ETH, again about 2x from the current price, is theoretically possible per the regression based fair value estimation and the one standard deviation residual applied to the fair value. If we were to look at for some of the blow off top scenarios for ETH, those historically have happened to when we apply 2 standard deviation residual to the fair value, not 1 standard deviation residual, and that takes the price action close to that 10k. But again, the last time around in 2021 the price action barely registered about a couple of weeks above this 95 percentile ceiling. Again, this time around, as the asset class matures and the market cap makes it harder and harder to make that 2 standard deviation residual moves. What I find personally useful is taking an average of this 10k and the 6.3k prediction using the regression model. Again, roughly speaking, that gives an average case at around somewhere between $8,200 and $8,500 if you take an average of these 2 forecasts and try to extrapolate it towards the end of the year. Again, if you want that extrapolated case for ETH, this is available at a daily level as well. This is the price color coded using the regression based model. Again, a similar polynomial regression based model looking at a 4k at closer to 4k as the fair value for ETH. Again, whenever the price action are in this lower tier colors, that is in cooler colors, that is blue and purple, that's where the DCA makes the most amount of sense. Again, this is live model, takes into the regression based fair value. Right now it's risk per the regression based fair value comes at around 19%. Second best time to DCA ETH. In this model identified the dip buying opportunity to the dot in April 2025, took the took the lows out at around 11% risk. Back then the price was more than 50% discount from the current price at around $1,472. That was at less than 10% risk. Again, a lot of DCAs, personally speaking, occurred in this area. The opposite of this is identifying where the risk for ETH is kind of in a peak regression. This is the two standard deviation residual applied to the peak regression over here using the daily price action. The last time around, you can see there were several weeks or days above this dotted red line. Right now that comes at around $8,200 for ETH. That means there is a chance that in this bull run, if ETH were to go to that 8.2k, that at this point in time, that is as the two standard deviation stands in July of 2025. Again, who knows what this dotted line could do as we move close to the year. Again, we can extrapolate, but again, extrapolation is not that helpful in these kind of exponential moves. Again, towards the December end of December 2025, this dotted line, if it were to follow the same trajectory, goes to close to that $20,000 target. Again, that might seem outlandish given the market cap of ETH is currently at around $360 billion. Over here you can if it ever lowers, currently speaking it's around $360 billion with that $3,000 ETH currently looming. If we were to look at around 20,000 in terms of ETH price action, then the market cap would need to be a 6x, at least a 6x from the current market cap. That would put ETH's market cap close to that $1.8 trillion. That is very close to current market cap for Bitcoin. It's currently at around 2.2 trillion. If that kind of a scenario is ahead of us, again there are no such things as sure thing in the market, but accounting for that kind of a scenario with this kind of bullish uptick in is again extrapolation. That kind of extrapolation is risky. That's why what we do is we try to every day accommodate the recent price action, the recent print on the price action, to train the fair value for that particular day. And if the slope of this regression function were to stay intact with that new data point, then that makes the most amount of sense. Coming back to how this can be utilized is again not financial advice. Right now, $8,200 seems to be where if there is a euphoria in the market, that is where the price action could take us. Again, the last three iterations in 2024, they missed this dotted red line. Again, that meant that there was a very low likelihood that the cycle peak occurred for ETH in 2024. And again, there is hope in the next half of 2025, at least the remainder of 5 months of 2025, that ETH could potentially make a move higher than what it did in 2024 at around 4k target. Looking at the some of the risk levels of interest, again between 0.4 and 0.6, that's where again a non-euphoria bull run target for ETH is again slightly close to that risk levels to watch out for. If price action were to go to that 0.4 and 0.6 risk level, the price action forecasted by this model is between $4,900. Again, this takes into consideration the time factor. Again, last time around at 4k in 2024 March, that was at around 0.56 risk level, but at a 4k price action today comes at only at 0.3 risk level. That is because the asset has matured and the fair value has grown quite a lot over the last 1 year per the polynomial regression based fair value estimation of ETH. Coming back to the 0.4 is at around 5k roughly speaking, and the 0.6 risk is at around 6.6k. So that's the price target for ETH per the polynomial regression based fair value estimation. Right now that would be about somewhere between 1.5x to 2x from the current price. The time weighted average price for ETH, again the price really came really close to the time weighted average price in April, and couple of days below the time weighted average price. Those were some serious accumulation phases for ETH. Only 3 instances, especially since 2022, when the price action came close to this blue line, which is the time weighted average price. In easier words to understand is what is the price action that in the bear market ETH could digest, and DCA below this blue line would make the most amount of sense with that hypothesis that in the bull run, ETH takes part in that bull run, and any time accumulating below the time weighted average price is an asymmetric bet. Right now the risk levels have kind of grown somewhere to about 50%, as the price action has doubled essentially from what it was in 3 months ago in April of 2025, with less than 1400 to now close to 3k. Nonetheless, as the highest that ETH went in this terms in this cycle in terms of the price action with respect to time weighted average price risk was 77% in March. Haven't seen any sharp moves from that point in time in ETH. So again, this also points to the fact that ETH still has had a lower 20-week moving average risk and time weighted average price risk than Bitcoin. This is Bitcoin versus ETH on its 20-week simple moving average based risk levels. Again, you could see that in 2021, only when ETH risk overshot Bitcoin risk, that's when the major peak occurred for ETH and BTC potentially. Also the same thing happened in first time in May, and then again back in November. Bitcoin led in terms of the price action, taking this charge away from the price action away from its own 20-week simple moving average, and then ETH stalled at that point, and as Bitcoin flattened, then ETH took the charge and rallied a lot on its 20-week simple moving average. This time around, since 2024 began, again you can see ETH has always underperformed on the 20-week simple moving average based risk based moves. Even in 2020, late 2024, this has been the case in December, when the Bitcoin risk was more than 0.8. That was the highest risk level Bitcoin has been, as well as ETH at that point in time was almost 20% lower in terms of the risk at a similar 0.8, whereas ETH went to 0.63. Right now Bitcoin is at around 0.61, whereas ETH risk is at around 0.55. We'll pay a close attention on how this progresses. If there is a chance that Bitcoin goes to the highest risk band and ETH then takes the center stage at that point in time, that could call for some of the end of distribution phase in terms of the market cycle. You can see that right now these are the popular narratives. The narrative word cloud, take into the consideration last 7 days worth of social media narrative related to crypto. Bitcoin is still holding the center stage, even though the overall sentiment is a lot bullish. ETH is somewhat lagging over here, and altcoins are also in general are rallying right now. ETH is having a meaningful presence on this narrative word cloud. Nonetheless, not taken the center stage at this point in time. We'll keep a close attention. By the way, all of this analytics available for free. All of this is derived from using machine learning techniques such as term frequencies, looking at a lot of social media activity, advanced techniques to look at respective popularity of narratives, as well as how to look out for narratives which are only around for a couple of days, and accounting for such outliers. So a lot of effort went behind making these models. So if you like this kind of analytics based monitoring of the crypto asset class, you can give us a like and subscribe to stay updated. All in all, again, as ETH is closer to being number one on the top 90-day performance in terms of the asset class, taking some attention away from Bitcoin as it moves close to its own all-time highs, makes a lot of all-time highs right now. Bitcoin's price action is at around 118 or 119k at this time, again making new all-time highs, whereas ETH is nowhere close to its market cycle highs also again. So again, the favorable seasonality, if that kind of favorable seasonality is ahead of ETH, DCA at this point in time, again with that hypothesis that if there is a new all-time high for ETH, again not the worst idea, again not financial advice, taking into consideration all of the risk-based models for ETH, the estimated bull run peak is close to that 9K target, where the regression risk is low, the time weighted average price is high, SMA risk is also kind of high, weighted risk is at 0.31, prices at around close to 3K, bull run peak is at around 9K. With that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.